So what does it really take for a global pharmaceutical giant like Pfizer to not just, survive, but actually thrive,
Yeah.
especially in this healthcare landscape that's just incredibly complex and always shifting?
Yeah, it's constantly evolving.
We're talking everything from like groundbreaking new drugs to figuring out these huge policy changes and massive cost cutting too. It's a huge balancing act.
It absolutely is. And understanding how a company like Pfizer handles all that pressure, well, it gives us a really invaluable window into the whole pharma industry. Maybe even lessons on adaptability that, go beyond just pharma.
Exactly. So today we're doing a deep dive into Pfizer's second quarter 2025 financial results and their strategic updates.
Right.
Our sources for this are Pfizer's official financial report and their recent 10Q filing. That's the detailed quarterly financial statement they give to the SEC for anyone maybe new to these kinds of filings. Both are dated August 5, 2025.
Yeah, these docs give you the official, pretty comprehensive look at their performance, what their priorities are, and, the challenges they're facing.
And our mission here really is to cut through all the, let's say, corporate jargon and the sheer amount of data
Mhm.
to pull out the most important insights, maybe some surprising facts, and the core strategies that are genuinely driving Pfizer's performance right now.
We want to give you that comprehensive understanding, but,
Yeah.
without drowning you in information.
Okay, so let's unpack this. Looking at the big picture numbers from Q2 2025, what immediately jumps out?
Well, the headline revenue was $14.7 billion.
Mm.
But the real story there, I think, is the 10% year-over-year operational growth.
Operational growth, right? We hear that term a lot. Why is that specific metric, operational growth, so crucial? What's it tell us that maybe the raw revenue number doesn't?
That's a great question. Operational growth basically gives you a clearer view of the core business health because it strips out things like foreign currency swings.
Okay.
So, say the dollar got stronger, that could make reported revenues look lower even if sales were actually strong in local currencies. Operational growth takes out that noise. It shows the real expansion.
Yeah.
And for Q2, their adjusted diluted EPS earnings per share, a key profitability measure that came in at 78 cents.
But here's where it gets really interesting, I think. Pfizer actually raised their guidance for the full year's adjusted EPS by $0.10.
Yeah.
So the new range is $2.90 to $3.00. And crucially, this raise absorbs a pretty big one-time hit, $0.20 from a specific deal, right?
Exactly. So even with that headwind factored in, they're clearly feeling more confident about profitability for the year.
That signals some real underlying strength.
Absolutely. And you hear that confidence echoed by the leadership, too. Dr. Albert Bourla, the CEO, talked about another strong quarter of focused execution and progress in advancing the R&D pipeline, driving commercial performance, and expanding margins.
Right.
And the CFO, David Denton, pretty much said the same, pointing to robust second quarter revenue and execution and operational efficiency.
So for you listening, what these top-level numbers suggest is a company that's, well, pretty stable right now, that consistent operational growth. It's a strong sign their core business is healthy and expanding, even with all these complex market forces. Stable with a positive outlook.
Okay, so if that's the big picture, let's drill down a bit. Revenue engines.
Yeah.
What products are actually driving this performance? And which ones are facing maybe some headwinds?
Well, their COVID portfolio definitely saw a resurgence. Comirnaty, the vaccine,
Yeah.
up a massive 95% operationally.
95%.
Yeah. Mostly higher net revenues in the U.S. Looks like they gained market share and also higher international deliveries they had under contract.
Okay.
And Paxlovid, the treatment, that saw a 71% operational jump, driven mainly by a higher U.S. net price after they moved away from the government agreement, plus some or favorable rebate adjustments from before.
But wasn't that offset a bit?
Yeah, good point. It was partially offset because, there were fewer COVID infections overall, and international governments bought less.
Right, makes sense. What about beyond COVID?
Well, the Vyndaqel family, those drugs for a specific heart condition, they were up 21% operationally. Mostly strong demand, more patients being diagnosed, especially in the U.S. and other developed markets.
Okay.
But, and this is a theme we'll see, the new Medicare Part D redesign, part of the Inflation Reduction Act, the IRA, that did dampen it a bit with a lower U.S. net price.
Ah, yes, the IRA. We're definitely seeing its shadow here. How
Yeah.
about liquids? That's usually a big one.
Still growing, up 6% operationally from higher global demand, but again, partially offset by that lower U.S. net price due to the Medicare Part D redesign and also some international price erosion.
So that IRA impact is really starting to bite across the
Oh, it
board.
seems like it. Then you got Abrisvo, their RSV vaccine. That was a real standout, up a huge
Yeah.
155% operationally, an $86 million increase.
155%, what drove that?
Mostly higher U.S. revenues for the maternal indication, so for pregnant individuals, and also good uptake from launches internationally. And interestingly, this growth actually more than offset lower vaccination rates for older adults after an updated recommendation from the ACIP, the advisory committee.
So they managed that shift pretty well. That's impressive adaptability.
It really is. And Lorbrena, that's for a specific type of lung cancer, up 48%.
Also strong.
Yeah, more patients getting it as a first-line treatment in the U.S., China, and other places. But, you guessed it, also partially offset by the lower U.S. net price from the IRA changes.
It's almost like a broken record with that IRA impact, isn't it?
It really feels that way for some of these blockbusters, but not everything was up. What about products facing challenges?
Right. Ibrance, for example, their breast cancer drug, that was down 8% operationally.
Why was that?
Mainly that lower U.S. net price again, thanks to the Medicare Part D redesign, but also some generic entry hitting them internationally and shipment timing issues.
So, this Inflation Reduction Act, the IRA, and specifically the Medicare Part D redesign part of it, it's clearly a major factor. Just how big a hit financially is Pfizer expecting from these changes this year?
Well, they're saying they expect a net unfavorable impact of around $1 billion year over year just in 2025 from these Part D changes alone.
$1 billion. Wow.
And the IRA's influence doesn't stop there. Eliquis is already tapped for the Medicare Drug Price Negotiation Program starting in 2026, and Ibrance and another one, Xtandi, are slated for 2027. So this is really signaling a new era of pricing pressure.
Definitely something to watch. Now, besides these big prescription drugs, what else contributes to Pfizer's revenue? Any other significant area?
Yeah, they have Pfizer Center One. That's their contract manufacturing arm. They basically make drugs or drug ingredients for other companies.
Right.
And then there was Pfizer Ignite, which offered strategic advice to smaller biotech firms, but they mentioned that's actually being wound down now.
Interesting. Okay, speaking of winding down and streamlining, let's shift focus to efficiency, innovation, and capital allocation. Building for the future. They have some pretty major cost-saving plans, right?
Oh, yeah, absolutely. The big target is achieving about $7.2 billion in overall net cost savings by the end of 2027. That's from initiatives they've already announced.
$7.2 billion. How are they planning to get there?
Well, a huge piece is their Realigning Our Cost Base program. That's a multi-year thing, aiming for $5.7 billion of that total by 2027.
And how are they doing that? Is it just cuts?
Not just cuts. A key driver they highlighted is using, and I quote, enhanced digital enablement, including automation and AI, and simplification of business processes. So tech is a big part of it, especially for hitting those selling, informational, and administrative costs, SI&A, basically their overhead.
So leveraging tech to work smarter, not just leaner. What else?
They also expanded their R&D reorganization program earlier this year. That's targeting about $500 million in savings by the end of 2026. But interestingly, they specifically said those savings are being reinvested right back into the R&D pipeline.
Ah, so that's more of a strategic shift, reallocating resources within R&D.
Exactly. And then there's a manufacturing optimization program aiming for about $1.5 billion in net savings by end of 2027, with some savings starting to show up late this year.
And are these efforts actually, showing up in the numbers yet?
They are. In Q2, they reported operational decreases in SI&A expenses of 8%, and R&D expenses were also down 8% operationally. So, yeah, it seems to be translating.
Okay, so beyond saving money, have there been significant organizational changes to help them focus better?
Yes, definitely. As of the start of this year, January 1st, 2025, they integrated their U.S. oncology commercial teams and global oncology marketing into a bigger, broader Pfizer U.S. commercial division.
Streamlining the commercial side. What about R&D structure?
Big changes there, too. They formed a single, unified Pfizer R&D organization. It combines what used to be separate global oncology R&D and the main Pfizer R&D divisions.
And what's the idea behind that?
It's designed to have end-to-end responsibility.
Yeah.
So from the very beginning, drug discovery, all the way through late-stage clinical development. They also created a new chief medical office within that structure. It's all about creating more synergy, breaking down silos.
Makes sense. So How does all this, the cost savings, the restructuring, feed into their overall plan for using their capital? How are they allocating their money?
Pfizer lays out three core pillars for capital allocation. First, maintain and grow the dividend for shareholders. Second, reinvest heavily in the business, especially R&D. And third, share repurchases, although that's less of a focus right now.
And how did that play out in the first half of this year?
Well, they invested a pretty hefty $4.7 billion in internal R&D projects. That's, a lot of science.
Yeah.
And they returned $4.9 billion to shareholders through cash dividends, which works out to $9.86 per share.
What about those share buybacks?
Nothing completed so far in 2025. They have authorization for about $3.3 billion, but their current guidance doesn't actually anticipate doing any buybacks this year.
Okay. And didn't they sell off a big asset recently?
They did. They sold the remaining stake in Haleon, that's the consumer health company. They spun off for $6.3 billion back in Q1. And they said those proceeds are directly supporting these capital allocation priorities, like funding R&D and dividends.
You know, what's really striking here is how these aggressive cost cuts and the restructuring aren't just about trimming expenses. It feels like they're fundamentally rebuilding parts of the company to ensure they can keep funding that future innovation, right? Like making those big R&D bets possible.
That's a great way to look at it. It's about building a sustainable platform for future growth, which leads us nicely into the next bit: pipeline progress and strategic business development. This is where future revenue comes from.
Right. So what's been happening on the product development front recently, say since late April?
Okay, a few key things. For Braftovi, that's a treatment for a specific type of metastatic colorectal cancer. They got positive phase 3 results, showed a 51% drop in the risk of death, and a 47% drop in disease progression or death. Pretty significant numbers.
Definitely. And what's the status with regulators?
The FDA accepted their application, an SNDA, for full approval based on that data. A decision is expected sometime in the first quarter of 2026.
Good news for patients there. Anything else on the vaccine side?
Yeah, they submitted their application to the FDA for the Comirnaty 2025-2026 formula. This one targets the Omicron subvariant LP.8.1. So they're keeping pace with the virus's evolution.
Staying ahead of the curve. What else is in the pipeline news?
Himpavzi. This is for hemophilia A or B patients who have inhibitors. They announced positive top-line phase 3 results showing it was superior to just on-demand treatment and improving bleeding outcomes. That could be a big deal for that patient group.
Sounds promising. Were there any setbacks or changes in direction?
Well, with Telzana, for a type of prostate cancer, the FDA approved updated labeling with the final overall survival data for its current use. That's good. However, it did not get approval to expand its use to a broader group of prostate cancer patients, those without HRR gene mutations. And Pfizer stated they won't pursue that wider indication in the U.S. anymore.
So a strategic pivot there shows they're managing the portfolio actively, knowing when to cut losses or refocus.
Exactly. It's not just about pushing everything forward. It's about making smart choices.
And outside of specific drug development, any other notable corporate moves?
Yes, something interesting on the access front. The Bristol-Myers Squibb Pfizer Alliance, for Eliquis, announced a new program called Eliquis 360 Support.
What does that do?
Starting September 8, 2025, it offers eligible patients who pay cash a discounted rate more than 40% less than the current list price. That's quite a significant direct-to-patient move, especially given all the talk about drug prices.
Yeah, that's definitely noteworthy. How about major deals? Any big business development activity?
Oh, a really big one. They completed an exclusive global licensing deal, except for China, with a company called 3S Bio.
Okay, for what?
For a drug candidate called SSGJ707. It's a bispecific antibody currently in trials for several cancers: non-small cell lung cancer, metastatic colorectal cancer, and gynecological tumors.
Sounds potentially significant. What kind of money are we talking about?
A lot. Pfizer paid $1.25 billion upfront, and they could pay up to $4.8 billion more if certain milestones are met, plus royalties in the double digits.
Wow, that's a huge bet.
It is.
Not bad.
And there's more. They paid an extra $100 million upfront just for an option to potentially develop and sell it in China later. Plus, they made a $100 million equity investment in 3S Bio itself.
And this is the deal that impacted the EPS guidance we talked about earlier.
Precisely. This transaction is what caused that $2.20 per share impact on their Q3 2025 adjusted diluted EPS forecast. It's a massive strategic investment in their future pipeline.
So looking at all this, the pipeline wins, the Talzenna pivot, the Eliquis access program, this huge 3S Bio deal, It really paints a picture of how critical these moves are for Pfizer's future products and market position, doesn't it? A real mix of advancing their own science, partnering strategically, and managing their portfolio tightly.
Absolutely. This is where the future growth engine is being built. But of course, there are always external realities to navigate, which brings us to the legal and regulatory landscape.
Right. Like any big pharma company, Pfizer faces a ton of uncertainties, right?
Yeah.
Legal issues, tax stuff, litigation is always unpredictable.
Exactly. And they're involved in quite a bit of patent litigation, for instance.
On which side?
Both sides, really.
Hmm.
They're the plaintiff in cases trying to defend their patents against generic drug makers for products like Xeljanz, Mektovi, Vyndaqel, Oxbryta, Nurtec, Xtandi, and Leta. It's a long list. Protecting that intellectual property is a constant battle.
And where are they playing defense?
They're defendants in cases where others allege they infringed patents. Notable examples involve Comirnaty, their COVID vaccine suits from Alnylam, Arbutus-Genevan, GSK, and Paxlovid, the treatment, faced a suit from Enanta.
Any key outcomes there?
Yeah, some good news for Pfizer recently. A district court ruled that Comirnaty does not infringe the patents Alnylam asserted. And Pfizer also won a summary judgment against Enanta regarding Paxlovid, with the court finding Enanta's patent invalid. So some important defensive wins for key products.
Okay, that's patents. What about litigation related to the products themselves, health issues and whatnot?
Well, they briefly mentioned the ongoing Zantac cases. You might remember that heartburn drug recall. The big federal consolidated litigation, the MDL, was dismissed, but appeals are pending. And they note many state court cases have either been settled or are basically settled as of August 2025.
Any other?
They also mentioned class actions related to Chantix, the smoking cessation drug, after its recall due to nitrosamine impurities. And lawsuits concerning Depo-Provera. It's just, part of the territory in this industry. High stakes, high scrutiny.
And then there's the broader governmental context, things like trade and politics.
Right. Pfizer notes in their report that their full year 2025 guidance already absorbs the impact of tariffs currently imposed by China, Canada, and Mexico.
Okay, so that's baked in.
Yeah. And they also note the guidance absorbs potential price changes that might happen this year based on a letter they received on July 31st, 2025 from President Trump.
How should we interpret that mention?
Well, it's important for you listening to understand the company is simply reporting on these external factors. They have to account for potential impacts in their financial outlook. They're reflecting the realities and, frankly, the unpredictability of the global political and economic climate they operate in.
Got it. So it's clear these legal fights, regulatory pressures, political wins, they're a constant, significant part of the landscape for a company like Pfizer. They can really shape financial results and strategic choices. It's like playing chess on multiple boards at once, isn't it?
That's a perfect analogy.
Yeah.
So wrapping this all up, what really stands out from this deep dive into Pfizer's Q2?
For me, it's a picture of a company showing, frankly, impressive operational growth and real financial confidence in its core business.
Yeah, I agree. And at the same time, they're aggressively pursuing these major cost savings and pushing hard on R&D innovation.
We've seen how they're, skillfully managing both the high demand for their blockbusters, but also navigating these really complex pressures like the IRA.
Absolutely, is that balancing act we talked about at the start.
So looking ahead, as Pfizer keeps leaning so heavily on digital tools, automation, AI, both for efficiency and increasingly for R&D, maybe a final thought for you to consider is, what does this rapid tech integration actually mean for the future? Not just for Pfizer, but for drug discovery and patient access overall.
That's the big question, isn't it? How might these huge strategic investments in technology shape the entire pharmaceutical industry in the coming years? Especially when you factor in this environment of increasing pricing scrutiny and louder calls for affordability. It's something we'll definitely be watching.